morning. It's 8 minutes after 10 on a Friday morning. That means it's time for the Real Estate Fix. I'm your host, Rich Szerman. You're listening to KHTS 98.1 FM, AM 1220, hometownstation.com. Thank you guys for tuning in today. I appreciate it. We got a big show today. Got a lot of stuff going on. We're going to talk today about interest rates because that's what everyone's talking about because the interest rates keep going up. And they're going to keep going up, which if you guys listen to the show, you know I've been warning you about this for quite some time. It's going to go up at least one more time before the end of the year. I'm very concerned we're going to hit 8% by the end of the year, but it looks like where we're headed. But yes, we're going to talk about interest rates now and in the future. We're going to give you some tips as to what buyers can do to deal with the ever-increasing interest rate. We're going to talk about some scams that I've seen come across. QR codes in particular is kind of the latest one that the bad guys are taking advantage of when you scan those square codes. We're going to talk about that and what to do about it. And we've revived one of my favorite segments called Bad Bank of the Week. This may be Bad Bank of the Year. We're going to be talking about Wells Fargo and some of the malfeasance they've just gotten. It's not even so much that they've been caught. They were caught a while ago. It's the way that they're being treated as part of the settlement is, well, in my view, ridiculous. We're going to get into that. And if it doesn't make you mad, then there's something wrong with you because this is just insane. And these are one of those stories. This is rather one of those stories that just doesn't get out there. It winds up, to use the old newspaper analogy because I'm old, it's not on page 1 above the fold. This is a page 6, page 7 story. And that... I want to bring it to the folks. I want you guys to hear this because you should all be getting on the phone and screaming at Wells Fargo about this and screaming at the Justice Department because what they did here is just insane. When you hear the story, you'll see what I'm talking about. We're also, time permitting, we're also going to talk about some vulture loans. We're going to talk about what happens when your house goes into default and the night creatures that come out of the ground, it would seem, from everywhere to try to take advantage. Well, they come to you in the guise of helping you, and what they're really doing is trying to take advantage of your misery to feather their own nest. So we're going to go over a loan that a client of mine was recently offered as sort of an example of what's out there when this sort of thing happens, and I think you'll be shocked. So thank you guys for listening. I appreciate you guys for tuning in. We're going to have a couple of interesting things and a couple of shocking things today. But before we get into all of that stuff, I want to mention this again. I've been talking about the last couple of weeks. I want to make sure you guys hear about this. There is a fundraiser going on that I would love it if you guys could go to called at Casa Gutierrez, which is in Lake Elizabeth, 8847 Elizabeth Lake Road in Leona Valley. And if you guys ever you see it when you drive by, it's the big white building. It's 2-story. It's got this giant balcony out front. It's a neat looking place. It's a nice place if you've never been there. But the people at Casa Gutierrez they're nice enough to open up their restaurant to fundraising. They're holding a fundraiser on October 1st from 11 a.m. to 3 p.m. It's sponsored by Casa Gutierrez, and they're raising funds to support families in recovery from addiction and victims of domestic violence. So a worthy cause. I hope none of you have ever had to experience that, or if you know someone who has, you know how important this sort of thing can be. And the way it works is they're going to be donating 10% of all their proceeds on the day. Again, that's October 1st. That's this coming, not this week, but next week, 11 a.m. to 3 p.m. And again, they're at 8847 Elizabeth Lake Road in Leona Valley, and it is a worthy cause. It's domestic violence and addiction. And yeah, they're giving 10% of their proceeds away, which is a heck of a nice thing for the people who own Casa Gutierrez to do. So if you get the opportunity, definitely stop by. It's a worthy cause, and it's good food. You'll have a good time. It's a nice place. I've been there once or twice. It's good stuff. So let's get into the rest of the show. Let's move on here. So, oh my gosh, what a difference a month makes. According to Freddie Mac, mortgage rates, back in talking about mortgage rates because we're talking about affordability. That's the big buzzword now in real estate. According to Freddie Mac, mortgage rates began August below 7% and are now hitting 7.23, the highest rate in more than 2 decades. According to Forbes, some banks report 30-year fixed interest rates as high as 7.75%. And that's bad if you hear it on its face, but when you juxtapose it to every available source agreeing that the average mortgage rate for a 30-year fix is now double the 3.22 versus to 3.5% level it was in late 2001, early 2022. So basically, in the last year, the interest rate, thanks to the Fed's actions to crush inflation, have more than doubled. It's unprecedented. It really is. We're very much in unprecedented times. And I say this about the Fed all the time. They don't ask me. I wish they would, but they don't ask me. And I have to assume that guys like Jerome Powell and the rest of the people at the Fed who have their hands on the levers there, that they know a lot more about the U.S. economy and the world economy than I do. Because I got to tell you, I don't understand what they're doing. So most people I talk to who are smarter than I am don't understand what they're doing. They're dead set on curbing inflation, which is good. I don't want the cost of milk or gas to go up either. But they seem to be targeting the interest rate as the kind of the sole way to do that. And they're crippling the real estate market in the process, crippling lending market in general. So This is not good stuff. Anyway, according to the Mortgage Bankers Association, because rates are substantially higher than a year ago, purchase and refinance applications remain stuck near their lowest level since the mid-1990s. And those of you who are old like me and remember the mid-1990s, you remember interest rates that were sky high, even higher than they were now. You remember a real estate market that was all but frozen. It was very hard to get money when you could. It was very expensive, and that's where they're leading us. I don't see that that's a good idea. But anyway, whatever the rate a particular buyer can get, we can all agree that the interest rates have gone up like a rocket since March of last year when the Fed started its interest rate increasing inflation crushing crusade. Interest rate, again, they're raising the interest rate as a way to crush inflation. That's what they're after. And they really have. Jerome Powell has taken it on as if it is a crusade. And it's a very dangerous way to approach things, in my view. But anyway, couple that data with the fact that according to Freddie Mac, 70% of all homes in the United States now have mortgage rates at or under 4%, and up to 85% of all homes in the United States have interest rates below 5%. So that only leaves 15% of the entire market with an interest rate above 5%. And I'm telling you, and I'll tell you this from personal experience, if you got an interest rate below 4%, like I do, you're not selling your house. The only way you're selling your house is if you have to, or you have some other agenda. Like I had some clients who sold to move to another state recently. I've had some who were selling to retire. Because if you were selling a house and you don't have another one to buy, now is a great time. This is your market. The prices are way up. There's very little inventory on the market because people are not bringing houses for sale. And so that's great. But if you have another house to buy, like you're going to sell one and buy one, or if you're a first-time buyer and you're getting into the market, it is rough. We're going to talk about some ways to deal with that a little bit later in the show. But all of this ridiculous interest rate raising that the Fed has gotten into has led to much more restrictive inventory because, as we were just talking about, there are fewer homeowners who are willing to sell. And in many areas like ours, that's kept the prices high. That's not true everywhere. Places like San Francisco, they've seen decreases. Seattle, they've seen decreases. All over the place they have, but it really hasn't hit Southern California yet. Doesn't mean it won't. It just means it hasn't yet. Really, the conclusion here is that the Fed's very actions to curb inflation have directly led to the very inflation they seek to prevent. And they're going to keep it up until they get over that hump and they pop the proverbial bubble on houses. And Southern California is the biggest bubble to pop right now. This can't continue this way. The Fed is going to continue to raise interest rates until the housing prices fall. Now, when the Fed talks about crushing inflation, what they're talking about is the housing market. When you hear the Fed say they're working to crush inflation, they're working to beat inflation, substitute the word inflation with housing market, because that's really what they're talking about. The single biggest segment, because it's the most amount of money in it, that the Fed is currently going after with these interest rate rises, in my opinion, is the housing market. It's the largest investment most Americans have, so that's where the numbers are, and that's where they're targeting. So anyway, expect mortgage rates to remain elevated amid ongoing economic uncertainty and the Federal Reserve's rate-hiking war on inflation. The best hope is that the housing prices fall in other places and the Fed is satisfied before they fall here. I don't think that's realistic, but that's really all we can hope for. Otherwise, you're going to be looking at prices decreasing as well. I just don't think that's a very realistic option to hope it's going to fall elsewhere and satisfy the rest of the national numbers and we'll get away with it. But we can hope. As I've been telling you and as I've expected, I've been telling you listeners this for months now, there's going to be at least one more interest rate rise before the Fed is done with this, before the end of the year. It looks like the data and the experts are all saying that same thing. I was not the first one on this bandwagon, but I like to think I was an early adopter. It doesn't take a lot to figure out why the Fed is doing what they're doing or what they're reacting to, but they are going to raise the rate one more time, at least once before the end of the year. Now, there was just a Fed meeting earlier this week. They chose to keep the rate standard. They chose not to move it, but they are tightening lending requirements, and that helped a little bit. But we all know that in the next two meetings, one is in one's November 1st and the other one's December 13th. Probably at the November 1st meeting, maybe the December 13th meeting, but probably the November 1st meeting, they are going to raise inflation again. They absolutely are, probably a quarter point. Again, I keep saying the same thing. I hope I'm wrong, but my intuition tells me, my research tells me, that the next meeting of the Fed on November 1st, or the one after on December 13th, the Fed's going to raise the rate. And here's an article from CNBC Money Watch, sorry, not CNBC, CBS Money Watch, that says pretty much the same thing. Let me read this to you because I think it's important. Following months of encouraging signs that inflation was cooling, there have now been two consecutive reports showing it rising again. In other words, they have failed to crush inflation by doing what they've been doing. The latest report, released a couple of weeks ago, showed inflation rising by 3.7% in August. According to the Labor Department, the Consumer Price Index, the CPI, jumped 0.6%, and the core CPI, which doesn't account for food and fuel costs, increased by 4.3% from 1 year ago. So the Fed's attempts to beat inflation by raising the interest rate and the prime lending rate, are not having the results they would like. The economy keeps fighting back, and every time it does that, the Fed raises the interest rate again. The Federal Reserve held interest rates steady while also indicating it still expects one more hike before the end of the year, with fewer cuts than previously indicated next year. So what does that mean for mortgages and home buyers, and how can the market for a new home do about it? For those in the market for a new home do about it? These are the questions everyone's asking themselves right now. So what does the new inflation report mean for mortgages? Let's talk about how we can beat some of this stuff and what's going to happen. What's going to happen with this new report is an increase in inflation likely means an adjustment to the benchmark interest rate. That's what the Fed controls, which in turn affects the mortgage interest rate. Now, there's not a one-to-one correlation, but it's close. You have to watch the bond markets to really get this straight dope there, but it's going to be pretty close. The benchmark rate is currently at a 22-year high at a range between 5.25 and 5.5. Now, that's not your mortgage interest rate. That's the funds rate that the Fed is setting. Typically, a mortgage interest rate is about 2 points ahead of that. So if it's 5.5 to 5.5 now, your mortgage interest rate is going to be 7.25 to 7.5. There's some variance, and if you got good credit and stuff, and you work with somebody like Sam at the Mortgage Hub, we can find you better interest rates. He certainly does that for our clients all the time. But those are the standards right now, 7.25 to 7.5. So the average mortgage interest rate for a 30-year loan right now is 7.42%. But if the benchmark rate goes up, as it's almost assuredly will, the rate for a 30-year mortgage will head upward with it. Last month, Jerome Powell said, we are attentive to signs that the economy may not be cooling as expected. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving substantially down toward our objective. And again, their objective is an inflation rate at or below 2%. As it just jumped to 3.7% in August, and the core CPI has now gone to 4.3, they're missing the mark, and they're going to raise the interest rate again. Keep in mind, one more rate hike will make a dozen rate hikes since March of 2022 when this madness started. 12 in a year, 12 in that kind of time period, 12 in about 18 months, is absolutely unprecedented. We have never, ever, ever before in this country, on this planet, ever, since the modern system was really founded in the mid-1950s, we have never, ever experienced rate hikes like this. And I don't know about you, but that worries the heck out of me. I don't like anything in the economy that's unprecedented. I mean, I suppose unprecedented profits would be lovely, unprecedented prosperity would be nice, but unprecedented rises in the interest rate over and over and over again, 12 of them in the last 18 months, 12 of them since March of 2022, is just too much. Just on the news of this alone, yesterday, the S&P fell 1%, NASDAQ fell 1.5%. And that's not anything happening. That's just with the news that it might go higher, because they know what I'm telling you. It's going to go higher. The next Fed meeting again is November 1st. If they don't raise it then, they will absolutely raise it at the December 13th meeting. My take, it's going to be November 1st. I would love to be wrong about this. So, accepting that that's going to happen, what can homeowners do right now, home buyers do right now? And there are really only three options you got. First of all, lock in a rate right now. Get yourself in the game, lock in a rate, take some time to find a house. Don't be in a rush, but lock in a rate. If you locked in a rate a month ago, you were well under 7%. If you lock in a rate now, on average, you're going to be well over 7%. And that could be thousands of dollars over the course of a year. It could be tens of thousands over the course of a year, if you're not, depending on the type of loan and the margins. So lock in a rate. That's number one. You can always let it go and lock it in again if the rate goes down. You can also talk about buy downs. It's buying down a mortgage. That's what you put money into the loan up front to get a lower interest rate. And that's just a matter of sitting down and doing the math. And you want to look at a 5-year scale, and I can help you do that and tell you how all that works if you really want to get into the weeds of it. But you can buy down the rate. And the last is get an adjustable rate mortgage. I am not a fan of adjustable rate mortgages. I think they're a bad idea. But in the current market, it's not necessarily a bad idea to get an adjustable rate, because I think what's going to happen, what I think I can demonstrate is going to happen, is the interest rate is going to continue to rise to the end of this year. Beginning of next year, it should start to come down again. Now, the magic number, in my view, that we're looking for is 5.5%. That's the magic number, 5.5. If we can get ourselves down to 5.5, the market will recover. It's not going to get back down to the 3.5 or 2.5 or even under 4 as we'd had during the pandemic. But I think the market will get down to under 5.5% or even at 5.5%, and that seems to be the zone where it needs to be to kind of normalize the market. But 7.5 is not it. So you could theoretically get an adjustable rate loan now. It's what I would do. Buy down the points on it maybe and hang in with that for a year or two and then convert that to a fixed rate when the interest rate comes down a little bit. Now, it is a gamble, but I think it's one worth taking given where the interest rates are at, because this interest rate rise has just been unprecedented. Oh boy, has it been a lot. So I tell you what, let's go to break. Let's hear from some of our sponsors. It looks like that time. We love to hear from sponsors. They pay for the show and they pay for the station. We love them madly. So thank you guys for listening. Please listen to them during the break. And when we come back, we're going to talk about QR codes real briefly, and then we're doing Bad Bank of the Week. Because, oh my goodness, have I got a story for you guys. I got a warning about QR codes, and I got a hell of a story about the Bad Bank of the Week. I'm Rich Szerman. You're listening to The Real Estate Fix with Rich on KHTS, 98.1 FM, AM 1220, your hometown station. Listen through here, and I'll be back in a few minutes. Hello, welcome back. Thank you guys for listening. Thank you for listening through the break. I appreciate it, and I'm sure the sponsors appreciate it as well. Welcome back. I'm Rich Szerman. You've reached the Real Estate Fix with Rich on KHTS 98.1 AM 1220, your hometown station.com. And right, so thank you guys for hanging in through the break. So let's talk. We were talking about interest rates before the break. They are going to continue to go up. And as I told you, I've been telling you guys, I think since I got the show in April, they're going to continue to go up through the end of the year, and that's going to affect housing prices. I would have thought housing prices would have fallen a bit by now, and in most areas they have, but in Santa Clarita and some other the high-value areas along the East Coast as well, they're sticking in. People want to live here. People are willing to pay for the houses, and there's so little inventory on the market that it's keeping the prices high. My concern is I don't know that I want to say that they're artificially high, but when your prices are still up and everybody else around the country and around the world are starting to see prices decrease, that ought to tell you something. It's not definitive because goodness knows Los Angeles has defied that in the past, but there's a very, very high probability we're going to be seeing houses prices go down, and there's a much higher probability, I will bet on this, that the interest rate is going to go up. And it's nice to hear that other people are starting to agree with that as well. But anyway, so let's talk about something else. Let's move on from interest rates. There was a bulletin put out by the DRE put out the first bulletin that I saw, and then the FBI put out a bulletin about QR codes. So here's kind of the latest thing. You know what QR codes are? Those are those square codes that they look like barcodes, but they're square. They're a big part of our world, and they're ever ongoing. They're going to become kind of the standard, and the idea is you scan it with your phone, and then it takes you somewhere and does anything. Now, in real estate, what we do with them is we put them on signs and flyers and things so that when you scan the QR code, you get the digital version. You get the virtual walkthrough, the digital version of the flyer, that kind of stuff. It's commonplace. But one of the things that's going on right now is that well, the first example I saw of this was from a friend of mine who told me this was happening to her, and then she sent me the DRE article. Somebody went to her, she's got a house listed in Glendale, and somebody went up to the house and slapped their own QR code on her sign. And she uses QR codes, so they slapped their QR code over hers with a sticker. And so when people scan the QR code, they don't get her the information about the house, they get a different realtor. Let me just tell you about this. One of the ways the scammers act is by replacing legitimate QR codes on the property sign or other advertising with their own fraudulent code they print out and stick over the agents. Or they might stick a QR code on your sign that they didn't already have one to begin with. Fraudulent QR codes can be pre-programmed to open payment sites, get you to follow social media accounts, or send pre-written email from your account. This happened to this friend of mine. In her case, not only scanning the QR code, also got you an email from her that looked like it was one of the most insulting, most down-market things ever that would prevent, I would think if she sent this email out intentionally, no one would use her as a realtor. So you scan the QR code on her sign, and an email goes out that makes her look foolish. Another email goes out that makes this other agent look great. And that is, oh boy, that is about as underhanded as I've ever seen in 33 years of doing this, and I've seen some stuff. So, be sure to keep a close watch on property signs and other forms of advertising. Regularly check QR codes and make sure they are linked to the right website if you're a realtor, because this stuff is happening. As outrageous as it sounds, it's happening like crazy. Now, the FBI warning is even more important. The FBI has issued an announcement to raise awareness of malicious quick response, that's QR codes. Cyber criminals are tampering with QR codes to redirect victims to malicious sites that steal login information and financial information. Here's the basic deal with anything, whether it's a QR code or an email you get or a phone call or anything else. If somebody calls you up or if a website calls you up and says something is going on, you've been charged incorrectly or whatever it is, do not take their word for it. Say, thank you very much, I appreciate that. I will contact my bank. Oh, we're from your bank. Okay, I'll contact him anyway. Oh, no, you don't. We can handle it right now. Nah, I think I'll do it myself. I'll just call in independently. The point is, any information you get in, you stop it at that point. Thank you for giving me the information. Then you move on, and independent of that information, you have a responsibility, unfortunately, to verify. So if you get sent an email, thank you very much. Now go outside that email. Don't click on the link in the email. Go directly to your bank. Go directly to the source. Go directly to whoever it supposedly came from. That's how you avoid scams. So it's a big, big deal. And if you have any questions about QR codes or seen any of this stuff, you can always call me. I'll be happy to help you with it. I can be reached at 661, as always, 714-1400. My number again is 661-714-1400. That is my home phone number. That's my personal cell phone. I give it out all the time on the air, and I'm happy to answer calls. I like my job a lot, so you can call me 24 hours a day, 7 days a week. One other thing I wanted to read. If you believe you have been a victim of stolen funds from a tampered QR code, report this to your local FBI field office. And you can get to the FBI field office at www.fbi.gov. /contact-us/field-offices. I'm sure if you go to FBI.gov, you can find it. Or the FBI also encourages victims to report fraudulent or suspicious activities to the FBI Internet Crime Complaint Center. This is typically where you want to go. www.ic3.gov. I give that to you again. ic3.gov. That's where you lodge that complaint. And the FBI needs to hear from you because there are too many of these scams out there for them to keep up with. And if they see enough of them, they'll get after it and they'll get it solved for you. So definitely, if you have an issue with that, give me a call. Much more important, talk to the FBI, see what they have to say, because that's how you defend yourself with these kind of scams. Don't get into one to begin with is the best advice. But anyway, all right, so there's the QR code scam thing. You've been educated about that, and you've been warned. Hopefully it does you some good. More importantly, my favorite part of the show, the Bad Bank of the Week. And Wells Fargo, which has appeared many times as the Bad Bank of the Week in my office and in my life, are they at it again. And this is an article I saw recently. It was not a big article. It was kind of hidden back there. But you do enough poking around with this sort of stuff. You get all kinds of stuff. Let's just start with a little information on Wells Fargo. First thing you need to know is Wells Fargo says it serves 1 in every 3 U.S. households. That's 33% of every single bank account in this country, according to Wells Fargo, they have. Now, I think that may be marketing. They have that many, but they have a lot. They're a big bank. Yet this big bank the federal government has limited Wells Fargo's growth. They are not allowed to grow anymore because of their almost unbelievable illegal activity. Now, just to give you again some little background, over more than a decade ago, hundreds of thousands of Wells Fargo's employees took part in sham sales practices. And you guys all remember this. This case broke around 2017, 18, and 20. It got supposedly settled in 20. They opened millions of fake accounts in customers' names to meet unreasonably high sales goals. Near as anyone can tell, they opened 16 million fake accounts from 2002 to 2016. So over 14 years, they opened 16 million fake accounts. So if you bank with Wells Fargo and somebody at Wells Fargo is not making their sales criteria, they may just decide you decided to get another credit card or another checking account or money market. You had nothing to do with it, but they were opening accounts, fake accounts, in their own clients' names. And when you open an account, money has to be transferred typically. So what that means is Wells Fargo was stealing from its own bankers, from its own customers. I don't think there's anything worse a bank could do. If you can't trust your bank, why would you put money there? It is a mystery to me why anyone banks with Wells Fargo or B of A or Chase or Citi. The 4 biggest banks, they all do this same sort of thing. Wells is the worst. In 2020, the bank agreed to pay, this is Wells Fargo, agreed to pay a $3 billion fine to federal prosecutors and the SEC over its practices. In May, Wells Fargo settled a class action lawsuit with shareholders, because by inflating this, they inflated the stock price, for $1 billion. So that's $4 billion under this that they've already spent on this fake sales scandal. There were 2 people principally responsible for this. One is the president of the bank, and the other one who really has to bear most of this is a person named Carrie Tolstead. And this is the part that made me angry. She was caught. She was caught red-handed. She was in charge. She should be in jail. She stole from people. She is a thief. Carrie Tolstead is a thief, period. But a federal judge decided on Friday that the former executive involved in the Wells Fargo fake sales scandal will not serve any jail time. If I steal your bicycle, I go to jail. Carrie Tolstead and Wells Fargo steals money from 16 million people over the course of 14 years. Nah, nothing for her. Carrie Tolstead, 63, of Scottsdale, Arizona, the former head of Wells Fargo Retail Bank, was sentenced to 3 years probation, including 6 months of home confinement. Am I the only one who thinks that when it sounds like 6 months home confinement might be a nice vacation? And I promise you, somebody who worked, and this was the head of Wells Fargo for this division, lives in a very nice house in Scottsdale. She said it's probably a compound of some sort. But anyway, home confinement for her role in misleading investors. Tolstead had been facing up to 16 months in prison, which is already nothing, but at least it's something. And she got out of it. Now, I looked some stuff up. The average Scottsdale home is about $776,000, according to Zillow, which, unfortunately for Carrie Tolstead and the people in Scottsdale, is down 4.9% since last year. So there's another place where prices are coming down, Scottsdale, Arizona. U.S. District Judge Josephine Stanton also fined Tolstead $100,000, which sounds like a lot of money until you understand she's got millions, if not billions, in fraud. And ordered her to serve 120 hours of community service. Well, that ought to do it. Lesson learned to the entire industry. If you steal from 16 million people and you steal billions of dollars and you make yourself millions of dollars in the process, good news. You don't have to go to prison. You only have to have do 120 hours of community service, and you can get probation for 3 years. And this is, again, This part makes me furious. United States Attorney Carol Small, Assistant United States Attorney Carol Small said in a sentencing memo filed with the court, quote, "Such a sentence reflects the seriousness of the defendant's conduct." Really? Promotes respect for the law? No, it doesn't. Provides just punishment? No, again. And affords general deterrence to other executives who might find themselves tempted to skirt the truth. At the same time, it acknowledges that defendant has accepted responsibility for her offense and does not pose a continuing danger to the public. Well, as she was forced to resign and she's never allowed to go into banking again since 2016, and she's 63 years old, yeah, I don't think she's going to run another multi-billion-dollar banking scam through a major financial institution. I think the danger to the public part I can agree with. However, the idea that this acknowledges the defendant has accepted responsibility, or worse yet, that it is general deterrence to other executives? What, are you kidding me? Steal from 16 million people over 14 years, and you get 120 hours of community service and 3 years of probation. Oh, and it costs you $100,000. That's ridiculous. If I could go to my local Wells Fargo branch and steal $1 million, and my penalty was $100,000 and a month in my house, which she didn't even get, and 3 years of probation, I don't know if you guys are all thinking the same thing. I'm sure. I'll drive. Let's go. I don't want to commit a crime. I'm not a bank robber. That's not how I do anything. That's not how I conduct my life. But you'd be thinking about it under these circumstances. From 2014 to 2016, Tolstead publicly endorsed a key Wells Fargo metric that measured the bank's financial success. Fake accounts, how many investors, how many accounts they have. But the metric was inflated by accounts and services that were unused, unneeded, or unauthorized. Tolstead retired from Wells Fargo in 2016. In March, Tolstead pleaded guilty to obstructing a government examination. All the stuff she did, that's the only charge that stuck. Obstructing a government examination. She lied to government investigators. It's not the underlying crime. This is ridiculous. Also, just so you also know, in a separate civil settlement, Tolstead agreed, she's banned from working in the industry for the rest of her life, and she's ordered to pay $17 million. I promise you she's going to file bankruptcy on that $17 million. And if she pays, it's because she can afford it. Which brings me back to the government's actions here were ridiculous. You represent Carolyn Small. You are the Assistant United States Attorney. You represent the people of the United States. That's me. That's you. That's everybody listening. And the best you could do under this circumstance is a deal because she obstructed investigators. Nothing about the underlying crime, and certainly no jail time. How dare you say out loud, as a U.S. attorney, that you honestly believe that this is going to somehow curb this sort of behavior with banking executives if no one goes to jail? I don't know about you, but I've had it up to here with banking executives taking responsibility for the crimes that they've committed. You send the chairman of the board of Wells Fargo to prison for 1.5 years. I promise you, the next chairman of that board will behave better. You send the CFO to prison for 1.5 years, and I promise you, the next one will behave better. You fine them $100,000 and put them on probation for 3 years, and say, "Oh, you have to retire now. You can keep all your money." All your ill-gotten gain you can keep, except for the $100,000 you need to get back. And it'll be a civil settlement that you'll have to deal with. Wells Fargo has paid out, near as I can tell, about $7.7 billion total. Because there was the fine for $3 billion, there was the settlement for another $1 billion, and there was another $3.7 billion that they settled as well as part of this suit. Despite all of this, she serves no jail time. Nothing happens to her. All of you listening, could any of you get that deal? Now, again, I don't necessarily blame the Assistant United States District Attorney, Carolyn Small here, because I'm sure that's the best she could do with it. I'm sure she's aware that these people should be in jail. I'm sure she was trying to get that done. But all they could get them on was obstructing an investigation. Not theft, not crime. Just in obstructing an investigation. So basically she got in trouble for a portion of the cover-up, not the crime itself. And no one's going to jail behind this. Wells Fargo defrauded its own customers. If you cannot trust your bank, why would you bank there? Now, my advice to everybody listening, and I hope you guys take me up on this, if you bank at Wells Fargo, close your account, move it someplace else. I like Logix. Logix does great work for me. I like credit unions. They're much more responsive. Logix is local, so they're nice. Or Santa Clarita Valley Bank. There are a lot of options. Find a nice local bank that you like and bank there. If these banks are too big to fail, you remember that too big to fail from the 2008 crisis? And yet they're bigger now. They were too big to fail then, and that was a danger to the world economy. Now they're bigger. And nobody's held to account for anything. And until or unless that changes, Their behavior is not going to change. Wells Fargo, I promise you, is up to the same kind of nonsense right now. They got away with it for 14 years, 16 million customers. There is a story out there about some fake accounts going to Wells Fargo right now where they didn't generate, but they're not watching over either. And this is the kind of nonsense that we deal with in my office on a daily basis. When these banks can act with impunity, they will. You know, imagine this. Imagine this scenario. Imagine the mayor of Los Angeles, Karen Bass, comes out and she says, you know what? We cannot fight crime in this area anymore. We're going to cordon off 4 blocks in downtown Los Angeles. No police, you're on your own. What do you suppose that area looks like in a week, in a month, in a year? Now imagine that happening to an entire financial industry. Because this is ridiculous. She was the head of the department that was responsible. This Carrie Tolstead was more responsible for this fraud and for allowing it and encouraging it than any other single person. There are plenty of people who are guilty here, but she was the most guilty of the group. And even under those circumstances, she's not going to jail. That's ridiculous. That is ridiculous. If you are high enough up the corporate ladder, you don't serve jail time. That's just the way it works in this country. I did it wrong. I got into real estate when I was very, very young. I like my job. I love helping people. What I should have done was become an executive at a financial institution and then just stolen from people blind and admitted it. Hey, I stole from 16 million people over the last 14 years. What are you going to do about it? Probation for 3 years? $100,000 fine? Sounds good to me. I mean, who doesn't take that deal? That's ridiculous. I don't know. I read this and I was just frankly ashamed of the U.S. Justice Department. And I'm a fan usually. I respect the work that they do. I know some people who work there and I like them a lot. And they've got a very tough job to do. And again, I don't necessarily blame the assistant U.S. attorney who was responsible here. I blame her for putting out that ridiculous statement because it's nonsense and she knows it. But I'm sure that's the best that she felt that she could do because of the rules that are in place. And that's wrong. That is wrong. If you are on the board of directors for a major financial institution, I would say for any U.S. corporation, you should be responsible for the acts that corporation conducts. If you are not responsible for the acts of that corporation, why are you there? To cash a paycheck? Because these are big paychecks these guys take in. I think if we're paying executives millions and millions of dollars a year, in some cases tens of millions of dollars a year, hell, in the auto industry they're averaging, $30 million a year for their top executives? Then nobody takes responsibility. I am responsible for what goes on in my office. I am. I'm not saying that because I'm proud of it. I'm saying it because it's a simple fact. Most of you have small businesses. Most of you who work anywhere, you are responsible for what goes on. And yet, Wells Fargo, nope, sorry, too big to fail, multi-trillion-dollar company. Just to give you some more information, CFPB was ordered to pay the CFPB ordered them to pay another $3.7 billion, which we talked about a little earlier, to settle this. They paid settlement for fraud from 2002 to 2016, 14 years. In 2020, Wells Fargo profits, the same year they started paying these fines, the same year they got caught and it was starting to be, in 2020, Wells Fargo's profits were nearly $20 billion. They were stealing from their clients at the same time they had profits of $20 billion. In 2023, in 2022, according to stock filings, Wells Fargo's net income was $13.2 billion, and they're upset about that because that's down 6% from 2021. So I'm sorry to hear Wells Fargo went down a little bit there. But yeah, $13.2 billion in profit, not enough for them. They need to steal from their customers so they can make just that much more. And apparently got away with it for 14 years. I don't understand. It used to be, if a bank got involved in a scandal like this, they ceased to be a bank. Remember we had savings and loans and those guys went to jail, the Keating Five and all that good stuff? They perp walked them out in handcuffs. We don't have savings and loans anymore because it was too dangerous a system. Yet Wells Fargo can do whatever the heck they want. And that's wrong. And the way to fix this is go to the local politicians. Tell them. Tell Mike Garcia. Tell the other people here. Tell them this is wrong. They know. They're not going to disagree with you. But something has got to be done. Congress and the local legislatures have to start stepping in and saying, if you do this here, you will go to jail. And yeah, some of them are going to need to go to jail to prove the point. Because they spent decades being bulletproof. And that's wrong. That's just wrong. So I tell you what, let's go to break. I'm going to calm down a little bit. We'll go to break. When we come back, we'll talk about some of these vulture loans that are out there and what some of my clients have seen. But yeah, Wells Fargo, just get away from them. They are too big to fail. We can make them smaller. Go elsewhere. Take your money, take your account to someplace else. Someplace small, local that works for you. That's my best advice. I'm Rich Szerman. You're listening to The Real Estate Fix with Rich on KHTS 98.1 FM. We come back, we're going to talk about vulture loans, these guys who come out of the woodwork when you're in trouble, and how to defend against those. But thank you guys for listening. Please listen through the break, and when we come back, we'll have a whole lot more show for you. I'm Rich Szerman. Thanks for listening. Hello, everybody. Welcome back. I've had a chance to take a breath and some water, so I'm hopefully a little calmed down about screaming at Wells Fargo. And if you work at Wells Fargo, or you really love Wells Fargo, or you hold stock in Wells Fargo, and you don't like what I had to say, I'd encourage you to argue with me. Come tell me I'm wrong. I would encourage you to do that. You can reach me anytime at 661-714-1400. That's my personal cell phone, 661-714-1400. You can reach me at that 24 hours a day. You can also reach me online at thefixwithrich at gmail.com. Thefixwithrich at gmail.com. Or you can go to my personal email, address if you'd like, which is just Rich Szerman, Szerman with a Z, S-Z-E-R-M-A-N, R-I-C-H, S-Z-E-R-M-A-N at gmail.com. You can get me at either one of those. And feel free to tell me I'm wrong. If you make a good enough argument, I'll have you come on the air. You can argue with me about it. We can do it in public. It'll be great because I'm very sure that I'm right. But yeah, so let's move on. Next topic. What we're going to talk about is vulture loans. Now, what is a vulture loan? Well, some years ago, the first time I ever heard this was, 20 years ago, when a friend of mine, we've had on the show, friend of the show, named Lou Esmond, who's a bankruptcy attorney by trade, but one of the most brilliant guys I know, he introduced me this term called vulture capitalists. And it's a great term because it sticks in your head and draws up all sorts of imagery. Vulture capitalist. Now, what a vulture capitalist is, as far as the mortgage market is concerned, is somebody who's going to sweep in under the guise of being your pal, being your buddy, helping you out, and really what they're seeking to do is rip you off. That's really what this is. And I have a form in front of me I'm going to go over with you guys because you got to hear this. I have a client right now, very nice lady. Unfortunately, her husband passed away about a year or two ago. She also got injured on the job, so it's kind of a 1-2 punch for her. She's got a house that is, and I'm not kidding when I say this, we verified it, house is worth about 1.2 million. She only owes about $400,000 against it, so she's got plenty of equity. And she wants to keep her house. She's got a good interest rate on her first, and she can, with her retirement, she can afford to do it, so it shouldn't be a problem. But she gets this offer, she gets an email. So what happens is, I'll run through the scam for you. What happens is, if you miss a couple of mortgage payments, and the bank files a notice of default, a notice of default is a lawsuit. It's the bank saying that if you don't get current, we're going to take your house. It's the first public step in a foreclosure. And the way it works is when they file a notice of default, they have 90 days for you guys to kind of work it out before they can file a notice of sale, and then 21 days after that, or on the 21st day, they will effect the sale. So you have 111 days from the filing. Now, because it's public, when they file an NOD, a notice of default, usually 60, 90, 120 days behind or more, when the bank files a notice of default, the trustee files a notice of default, it's public. And because it's public, all these databases start ringing. And so we send out letters to my office when we see notices of default. We send them, hey, we can help you for free. Give us a call. Happy to help you fix this. We do this for nothing. We're happy to sort it out for you because we want you as a future client. And we do that. So we rely on it as well. But these vulture capitalists come out, and you get an email or you get a postcard in the mail or something. Some of them get your phone number and call. That happens a lot too because they use reverse directories to get people's phone numbers. And they call up and they say, hey, we got a deal for you. We see that in her case, she's $35,000 behind. Now remember that number. She's only $35,000 behind on a $400,000 loan on a house worth $1.2 million. So it's not a lot. $35,000 is not a whole heck of a lot. And she has a current interest rate of around 3.5%, which is pretty good. So this fellow comes along. I'm not going to use his name, but he comes along and he says, I got a deal for you. I can get you a partially amortized 40-year loan due in 2 years. Now, I do this for a living, and I know exactly what that means, but partially amortized loan, 40 years due in 2 years, that's like a platypus on wheels. That's a really weird thing. What the heck is that? And when you read through the terms, because luckily she had the wherewithal to say, well, okay, that sounds good. And they were talking back and forth, and he's putting it in a loan. He thought she's going to bail her out. She's going to get $35,000. And he was the solution to her problem, she thought. They always come as the solution to the problem. And luckily, she had demanded on getting the terms in writing before she signed anything, which is also, by the way, the law on the subject. The first thing you need to know is these loans are not typically real estate loans. They're being used for real estate, but they are business loans. Why? Because as a business loan, they do not have to follow the same requirements as a normal mortgage loan. They strip the protections that go to the homeowner. If it's a business loan, the homeowner doesn't have the same protections. So here's the terms they offered her. She can borrow $415,000. She only needs $35,000. $415,000 at 13.99 interest rate. Term of the loan, 24 months. Not allowed to do prepaids, can't prepay it. Now, it's illegal to have prepayment penalty on a regular mortgage loan. Business loan is fine. So if she pays it early, there's a prepayment penalty. They're going to be in first position because they're going to pay off the first. They want to make sure they got their equity in the house. They want to make sure there's no first in their way. Plus, they can charge more on this ridiculous loan the more they borrow. Her payment on this mess would be $4,856.83. Her current payment's $1,200 a month. But it's okay because they're going to finance 6 months worth of those payments for her. Hell, they may even finance a year worth of those payments for her. That's an option we can talk about later. because all they'll do is loan her more money and then roll those in there. They're rolling in their own profit margin. Why wouldn't they? They have no intention of getting this loan serviced or paid off. They're going to take the house. When you hear the terms, you'll hear why. So they want $4,856.83 a month from her, which is $116,563.92 over 24 months. 116, almost 117,000 they want from her in payments. The estimated balloon payment, now remember, this is a loan that started at $415, which is way more than she needs. The estimated balloon payment, $419,344.54. Yeah. So if you take the $419,344.54, that's the balloon payment that she has to pay in 2 years, plus the $116,000 that she's already given them in payments, supposedly, if she did this, that's $535,000. So on the $415 she's borrowing, remember, she only needs $35, but on the $415 she's borrowing, her payback is $535,908.46. That is a $120,000 profit, $120,908.46 profit, over $120,000 profit for this bank on their $415,000 loan amount. Now, if that doesn't sound user and obscene to you, you're not thinking. 24 months, they make $120,000. That's profit. That's over $5,000 a month over the course of the 2 years in just profit. No principal reduction, just profit. Now, there's also a prepayment penalty of about $30,000. We'll just ignore that. If she's late, 10% penalty. And this is my favorite part. This is my absolute favorite part. If she defaults, which of course you're going to default on this loan. You're in foreclosure now, and they're giving you ridiculous. There's no way. Of course everyone who does a loan like this is going to default at some point. You're going to drown at some point. If she defaults, the interest rate goes to 31.99%. I don't know about you, but a 32% interest rate sounds a little high to me. So if you see this kind of thing, if you get this kind of offer in the mail, run. These are a bad idea. What you're doing is you're jumping from the frying pan into the fire. If she were to take this loan, she would lose that house and all the equity in it. I promise you that. So you've got to be aware of these things. Don't just take any lifeline that comes, because the lifeline may actually not be a lifeline at all. It may drown you. You've got to avoid these things. Get the terms. Get them in writing. Have somebody who knows more than you do look at them. It's the only way to defend yourselves, and these guys come out of the woodwork. That's why we do foreclosure defense for free. If you find you're in trouble, come to me, we'll help you out. We do it completely for free. I want to thank you guys for listening. That's my time. I'm going to wrap up now. I'm Rich Szerman. This has been the Real Estate Fix with Rich on KHTS 98.1, AM 1220, your hometownstation.com. And I really appreciate you guys listening. Hope we learned something today. And if you have any questions, issues, comments, whatever, give me a call. You can reach me all the time at 661-714-1400. Again, that's my personal cell phone number. Call me anytime except Friday mornings when I'm on the air, and I'll be happy to help you out. If I don't answer, text. Thank you guys for listening. You guys have a great week. You be good humans.